Hey guys, hope you are all having a great weekend. I have a multitude of really cool videos to share with you guys that I didn't release on Thursday for obvious reasons. This segment will be like morning videos, where we touch on a different sector of the economy where the same players betting against our meme stocks also look to manifest and impose themselves as sole manipulators to make riches out of you. It's going to be a very relaxed video to give you some insight as to the current events taking place in the economy that affect all the markets in many indirect ways. I hope you guys like today's segment. Shout out to the folks at Better Dwelling for always providing great content. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. We talked about America, we talked about Spain. Foreign investors, many which are comprised of American companies like Blackstone, continue to place efforts of monopolistic control on as many real estate properties as they can. Today we are going to talk about Canada, because what is currently happening there, according to the United States Federal Reserve data, serves as a tale of things to come. I have a small but loyal audience in Canada, so this will most likely hit home, and I encourage you to speak about your experience down in the comments. For the rest of us, especially my American audience, take this as a warning, because what is happening over there is most likely going to start happening over here as well. Canadian real estate buyers continue to get more and more irrational according to the world's biggest central bank. The Federal Reserve recently published their exuberance index, and in it, Canada seemed well into being in a real estate bubble. In fact, this released index, which is considered a smoking gun for bubbles, actually shows Canada to be in a bubble of a bubble. Much like we have said with the ongoing shortings of GME and AMC, researchers point out that markets that become exuberant will experience a correction in the future, and that the longer it takes them to correct, the larger and more dangerous it becomes. Let me break down this Federal Reserve Exuberance Index a bit. What this index does is seek to identify exuberant markets, looking for explosive dynamics in prices in which growth is in excess of fundamentals. Exuberant price growth is often considered irrational, as it can be easily attributed to emotions, and we know that emotional buying is prone to rapid corrections which can become catastrophic for more than just a single player in the market. Now, given the dynamics of real estate markets, and even the stock market, a couple of quarters of exuberance isn't a big deal, but persistent exuberance, especially one that keeps on growing, is something to be cautious about and rapidly addressed. When buyers in a transaction show persistent exuberance, the entire market is considered exuberant, and an exuberant market is quite literally by all definition a bubble. This index was created by the Fed after the Great Recession as an early bubble indicator. If regulators and market participants looked at the index as a guide, they would address the issues early, minimizing damages done to the economies they partake in, but we know the evil hand of Wall Street knows no limit. It cannot acknowledge that which is a warning to others, for psychopathic boards drool at any opportunity to make profits even if it costs the world trillions of dollars of damage. Canadian real estate just logged yet another quarter as an exuberant market. It has more than doubled the threshold value of 1.37 needed to be considered an exuberant quarter, making this the sixth consecutive quarter. In smoother words, Canadian real estate is in a serious bubble, and if data indicates anything, it's that it is on a path to make things a lot worse than the last 6 quarters. Canadian real estate is headed in a straight linear road toward a crash. When that crash will happen is impossible to determine, but it's coming. Taking a look back at historical data shows that their bubble started in 2015, and that the way they have gone about poses them in a bubble of a bubble. A large correction is needed to fix this problem. When you look at the figures indicating the value of Canadian real estate, it shows that it is currently worth $6.1 trillion, which is more than 3 times their entire gross domestic product. Let me say this again. Canadian residential real estate, which is valued over $6.1 trillion, is worth more than 3 times the country's gross domestic product. This is absolutely ridiculous, and goes to show how out of touch real estate values are. You might be wondering why has no one done anything about this? The answer is a bit more complex than most would like it to be, so let me try to smooth it out for you. Canadian politics are not really touching on real estate as a problem to fix, mostly because home ownership in Canada is over 60%. No one is going to stand in a podium and announce new policy aimed at changing things that could cause the majority of Canadians to lose value on their investments. This leaves the remaining 40% or so of people out of luck, quite literally. It means that their banks and government were smart about this, allowing home ownership to be slightly above the majority just so they can punish a little under half of all citizens by essentially negating them the opportunity for home ownership. Foreign investors are coming for everything right now, and their government has happily let them take whatever property they want and raise prices with seemingly no restrictions. Again, in what world does the real estate value of a country outsizes the GDP of their own economy? Canada, according to a big report by Laura Hanrahan earlier in November of this year, has more than 1.3 million homes sitting vacant, making it the fifth highest amount for any country in the world. Attitudes of people, which I covered briefly in another previous video, show that younger generations are giving up entirely on home ownership. Instead, what we are seeing is people being forced to rent small apartments and spend their money elsewhere like retirement plans and travel. There is just no incentive to own a house when the prices for an unfinished house can sometimes be over $1 million according to some of the research I made. What's that famous phrasing, "You will own nothing and be happy"? It's only a matter of time until things start to crumble, as this bubble and their growth is impossible to maintain long term. To make things worse for the Canadian economy, employers are struggling to find labor. Statistics Canada data shows over 1 million vacant jobs as of September this year. The hiring boom is reopening pains as the economy tried to continue to grow. You will hear tons of business owners complaining about the youth not wanting to work, or pinning the problem with current government policies, but in reality, it all comes down to the fundamentals of economics. Data shows rising vacancies were met by a drip in payrolls. INF Act, the problem is so linear and singular that I will put this problem as being the direct correlation of lower wages. People simply will not work a job that doesn't even cover the cost of rent. Canada's job vacancy rate has never been higher. The United States has seen wages grow as employers have been forced to compete with one another to attract employees, but wage growth in Canada has been tepid, stagnating, and as such, it makes total sense why there has been such a huge drop of employed individuals. I mention this because no singular portion of an economy can collapse at all. Multiple factors all attribute to the demise of a country's economy, and Canada is not looking too hot right now. They have a serious problem letting foreign investors inflate their real estate. They are not proposing policy that will make jobs pay higher wages in order to lower unemployment. Canada is doing a lot of things wrong, and it's only a matter of time before they start seeing the serious consequences that this will have. Canadian real estate will crash, I have absolutely no doubt about that, but the crash can either be bad for a month, or be so colossal that it can put Canada in a serious recession for a decade. Stop ignoring the 40% of people without a house for banks and foreign investors, or face the dire consequences that will ensue. I want to thank you all for watching this little video. Hopefully I inspired a wrinkle or two. It's not just Spain or the United States. The long arm of Wall Street stretches across the globe to try to crumble everything we have built for the sake of pocketing all the riches. Stay woke, inform yourself and HODL your investments to the moon. That is all I have for you guys today. Let me know your thoughts down below in the comments. Thank you all for making it to the end of the video, you guys are all amazing. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Until then, enjoy the rest of your weekend and to the moon.